And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
All right. Good morning, everybody. Welcome to the Market Forecast. Thursday, February the 10th, the day we've all been waiting for, with the majority of the economic numbers today. I'm John Hoagland with the Never Ending Cold. Thank you again for trusting me with your time. As always, seeking accurate context, good risk management, and patience is going to be a challenge for us today. As we all are aware that the 730 CPI numbers came out up to another 40-year high. Year over year, they were looking for 7.3, came out at 7.5. All of the CPI numbers came out higher than expected. Jobless claims, okay, not bad, but I don't know if that's going to help us today. They were looking for initial jobless claims of 230,000. It came out 223,000 less than they were expecting. Continuing jobless claims, however, leached up a little bit of about 6,000 continuing jobless claims. 9:30 this morning, we're still waiting for the EIA natural gas numbers. Don't forget, 12 o'clock today, we've got a 30-year bond auction, and it should be an interesting auction for us today. Earlier today, as we were getting up and starting our homework, stocks and most of our markets were pretty much guarded, not too far from settlement, just waiting for the information. Obviously, we've got a volatile, possibly a volatile session in front of us. Notable earnings today: Coke, Pepsi, and Philip Morris all beat expectations. Twitter, however, had a pretty big miss. After the close, we're looking at Yelp, Zendesk, and Zillow, just to name a few. It's a long list of earnings due out today. Crude prices are back up above $90 after the EIA announced a 4.7 million barrel draw in crude stocks. And we can prepare as much as we want before these numbers come out, and these numbers can change everything. If you were in the group coaching yesterday, we were talking about the situation in the E-mini S&Ps. We're going to talk about that when we get to the charts, but, it's just a reminder that, we are in the market's environment. It's not in our environment. The best laid plans of mice and men often go astray, so it's very difficult to plan for something like this morning when maybe we expected worse CPI numbers, but how do you set up for it? How do you prepare for it? It's very difficult to do. We're going to see, we're going to look at the charts here shortly. We're going to see what the markets are doing. We've had a pretty decent move here prior to the open. What does that mean for us? We got a lot to see. The VIX up 7% at 2136. Dollar index up 95.73, and the 10-year yield spiking up to about 1.98% just after the number. We can hear that Lacey's up. Lacey's already with us. Good morning, Lacey. And as always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome. You subscribe to our YouTube channel. You get notified when we do go live. Hopefully, if you attended the Q&A session with the founder yesterday, you enjoyed that, got some information, got your questions answered. And I'm going to say good morning to everyone. George, first in the room. You win the prize. Scott saw and he conquered. Jeff Martin, Mirik, good morning. Jay, bonjour. Yes, we just had the inflation and unemployment numbers. Spencer, good morning. Isaac, Theo, good morning. Zerain, Spencer, Yeah, it's a good idea to know what numbers are coming out. Absolutely. Uh, uh, Shaw, Denny, Charles, Ronald, Vince. Good morning. Which way did he go, George? I mean, which way? What do we do, Hogue? I don't know. Vince, Devant, Kirill, George, Drew. Good morning, Spencer. FOMC weeks are going to get a little crazy this year. Absolutely. Absolutely. We're going to be raising rates. Dave, good morning. Charles, talking about as our arch nemesis inflation returns, what will happen to our friends, the ES and the NQ? Find out on As the Market Turns. It is like a constant soap opera, isn't it? We never know what's coming next. Albert, Ray, good morning. Expediter, Charles. Raising rates are bad for all debt-burdened companies in the Nasdaq that don't turn a profit. It's going to be hard for them to maintain those levels of value. Definitely, even as definitely the ES is getting hit pretty bad. Yep. Spencer, Jeff. Good morning, Rick. My brother, I love you. Stephen, Deanna Floyd. Good morning. The Q&A session yesterday was good. I'm glad you enjoyed it. Jeffrey, Mike, Bruins goalie retired. Wow. Becky, Tuukka Rask. Good day, Ryan, Louis, Columbus, Expediter, Pajoli, good morning. Rob T, Cervidae, Harvester, good morning, Mike. Slamak, Mike, good to see everybody. All right. We got about 7 minutes before crude oil opens. Remind yourselves, ladies and gentlemen, with the volatility today, yeah. Rask, yep. How about that, huh? Remind yourselves today, it's important to stay patient. These markets are going to try and bully us into taking trades that may be outside of our trading plans. It's hard to have a trading plan on a day like today. We don't know what's going to happen. Give yourself the opportunity to find some sort of structure to lean on. It's all about risk management. All about risk management. All right. So why don't we jump in and take a look at the charts? Let me make sure I'm set up correctly over here. And we're going to jump in just a moment. Yeah, gold really taking it on the chin. Everything looks like it's getting whacked here. All right, so we're going to start with the E-mini S&Ps, and here we go. All right. So S&Ps, we had it looks like a really impressive breakout to the upside from what would be a bull flag. Volume wasn't all that great. Wasn't even all that great in New York. And we were watching Delta yesterday, which is the number of contracts that trade on the offer minus the number of trades that the number of contracts that trade on the bid. And as the market continued to push higher yesterday, we saw Delta moving in the other direction, which can indicate a potential accumulation, usually going to be created by a longer time frame, but that didn't happen. I'm really surprised. So this move to the upside, similar to these days, we lost open interest yesterday, 4,600. Really kind of surprised by that. So that means that there was no new business coming into the marketplace. We were taking care of old business. There was some short covering, probably into some long liquidation. The people just kind of flattening, or he was just flattening, or positioning themselves, hedging themselves for what was due out today. So we didn't get the increase in open interest that we were looking at. If we're going to continue higher, it's going to take new business to do so. And right now, it looks like any plans for moving higher are off for the short time frame here. Here's the 30-minute chart. You can see this red line here. Okay, it zeros at 8:30. This is a much easier way to look at the delta. So while price continued to push higher through the regular day session yesterday, delta kept increasing in negativity. Well, that's a divergence. That says that there's something else going on. When delta is negative, that means that aggressive traders are hitting the bids using market orders. Typically, that should move price price lower. But when price moves in the opposite direction, that's an indication of a potential accumulation in longer time frame. In this case, it was more of a short covering meets long liquidation event. It seems we didn't lose too much in open interest, but it just didn't play out the way I was thinking. So we have to make adjustments to that. When we open this morning, we're going to be opening with a gap. We're going to be opening inside a gap. Are we going to be creating an island top here? And we don't really have a move to the upside that would indicate a powerful island top. But it is still entirely possible. We know we've got inflation. We know rates are going up. How are these markets going to respond to that? So we've got our area of balance down here. Where are we here? We're in an area of balance, so to say. We're still inside yesterday's range, extended trading hour range. So the change in price isn't all that tremendous here just yet. We got to see what happens when the U.S. markets open. Opening range is a possibility. We're out of range. We're out of balance. Big news. When the market opens, if the opening range is left at the high or the low, it might provide a good opportunity for us. I said might. So how do you have a plan for this? You'll look for structures to lean upon. Look for structures to lean upon. Let's take a look at the crude oil now. Probably not going to be all that much impacted by this information. We are coming into rollover. Officially in rollover. Next Thursday is planned switch day from March to April. We're going to be watching volume, of course. We'll let you know when we're changing. Switch day again next Thursday, approximately. Moving to April. Yesterday, on low volume, we managed to add another 2,500 in open interest. I'm going to be looking at this area of balance as a potential for a rollover range. When we think about rollover, we've got a whole lot of traders that have a whole lot of contracts that are they're either going to take or make delivery, or they're going to roll those contracts into future months. If you're going to be trading, if you're going to be moving those contracts into future months, you can save yourself a whole lot of money if you've got 1,000 contracts of crude oil by getting it done on the bid or the offer, or legging, as they say, just taking adding one leg, taking the other one off. It's a process that takes concentration, and it probably takes their view away from being directional, and they will get directional if pushed, but their main goal for the next 5 to 6 days is going to be getting a cheap rollover. So it's going to take some of our longer time frame traders out of the directional picture unless pushed. So we're looking at the range here as last week's high, 93.17, and yesterday's low, or the previous day's low, approximately 88.41. It's a pretty big range. It's a $5 range. But inside of that, there's going to be hints and levels created by shorter time frame trades that may offer the opportunity for risk management. Okay, so here we have our island top. We closed out the island top in the overnight session last night. Is that going to be good enough? Where we are right now is we're in range, we're in value. We don't really have any big change in the value of crude oil. Here's that low. We tried to check this naked point of control here. We didn't get to it. Still haven't gotten to it in the regular trading hour session. We've got the gap here that creates the island top. We were looking yesterday as buyers possibly present here in the last 2 days, actually. Buyers possibly present here in this previous area of balance here, okay? This might end up being a demand zone. Supply might be up here, in this area. So we're going to look to possibly close out this gap. We're going to look for bigger opportunities at last week's high and this week's low, and looking for opportunities to limit risk on shorter time frame levels. Point of control. That's this week's low. The high of the previous area of balance. We've opened in range and value. Let's take a look at the 1 minute chart, see if the opening range offered an opportunity, and it did. Okay, here's our opening range, 07 to 71. Wow, that's a pretty substantial opening range. So now I think the CPI may be getting a little bit digested in crude oil here as a potential for limiting demand. Typically when we open in range and in value, the opening range trade is typically not all that great. Certainly working for us today. Information changes everything. Nasdaq. Here we go. All right. Very similar. Equally hollow upside move. Couldn't get to the same level that it did yesterday in the S&Ps. Losing 3,200 in open interest. Again, probably a lot of positioning and hedging for the information due out today. It's going to need new business for this market to continue to move to the upside, and that's going to be hard to find with this new information. The 30-minute chart. Okay, we are continuing to push to the downside here. We've got a gap. Again, a potential island top. I'm not all that impressed by it because the market doesn't directly get to it and then move back. It's more of a high consolidation and then a move back up to a potential island top. We've got more recent activity higher. And again, this is going to be one of those days. It's going to be tough. It's going to be a hard day. Opening range trade in the equities might be an interesting opportunity for us. You're going to see these markets trying to dive and pick up unfinished business from the past. All of these green lines, these naked points of control, are going to be targets and potential opportunities for us. We've got last week's range here to here. We've got weekly kickoff low down here, which is basically very close to a naked point of control. There's lots of targets to look for. Be cautious. I'm going to remind myself to just be patient. I'm going to allow myself the ability to miss a couple of things with the benefit of a potential bigger, better deal later on. I'm going to sell myself. It's okay to miss a few things, because when the opportunity strikes, it's going to be, I think, a good one. Gold volume was okay yesterday. We added 7,800 in open interest. Price is was basically kind of sitting on this inflection level, this weekly kickoff high, 1834 this morning when we were sitting down. Now we've got new information. The market knee jerks in both directions. This is just crazy. And right back into range and value. This market is a market that is trying to bully short time frame traders to be impatient. Try and stay patient. To the euro. Okay, we had 5 days in balance. Looks like we're breaking out of that balance to the downside a little bit. We've had a pretty decent jump in the dollar as this information has come out. So when we're in range, we fade the range. When we break out of range, if there is evidence of continuation, we are going to go with the breakout. 1, 2, 3, 4. The breakout kind of occurs here. We're picking up old information here. This naked point of control is now checked. So we've got plenty of other targets down below. We've got points of control. We've got gaps. We've got all kinds of information. Unfinished business. We've been testing up near weekly kickoff high all week. Now it looks like we may be finally getting some direction. I'm going to take these and kind of take them off the ray. So I'm looking horizontal for opportunities. Value low here. We take out that value low. Obvious targets down below. Naked points of control and gaps. The 10-year was just kind of waiting there on that tightrope for the last couple of days for this information. Kind of knew it was coming probably. And now we're getting rates, a big spike in rates. So, of course, the 10-year is now breaking out down below weekly kickoff low. There's plenty of space down there, ladies and gentlemen. The 30-minute chart is going to tell us the story. Just walking the tightrope here, coming in, closing below it yesterday, continuing the move to the downside so far today. That's natural gas. This is the 10-year. There it is, just kind of dancing along this tightrope here. The number comes out and rates spike. Bonds go lower. It's going to be an interesting 30-year auction here this morning, don't we think? Take a look now into the natural gas. So supply worries are easing as spring approaches. We got a lot of disillusioned longs in here. Yesterday we lost 26,000 in open interest in nat gas. We lost 24,000 the day before. That's 50,000 in open interest lost in the last two sessions. A lot of disillusioned longs licking their wounds right here. They're bailing. So we've got our island top that created this potential downside move, and what a downside move that was. The 30-minute, we got still some stuff to kind of clean up down below. It's not going to surprise me if we start to run out of sellers, and where we've got a swing low down here. We've got a previous weekly kickoff level down here. I'm kind of backburnering this market right now. I think we run the risk of getting to be a little bit too short at some point. We'll have to see. So yeah, it's not a good time to be under the weather. And I'm really kind of surprised how long this cold is sticking with me. We've got a lot of good conversations about Tuukka Rask here. He was really an amazing goalie. He's retired, and hopefully he's going to enjoy. It's weird how reporting more inflation suddenly makes all of oil deflate in value. I think it's more of a question of potential supply as people have less money to spend. Rick's talking about inflation 7.5% with negative real rates based on the inflation, right? Fed in trouble paying back all their debt. Yeah, and they can't raise rates that much more because it's just going to make their debt more expensive. So they're walking a tightrope. This is a pickle, isn't it, Rick? Isn't it, everybody? Lots of fish. Yes, some might be sharks. Trade carefully. Well put, brother. All right, so no other events today except for the market recap. I'm going to be with you for the market recap again today. We'll take a look and see what the market's provided for us. And again, like Rick said, there'll be a lot of fish, but some of them might be sharks. So be willing to miss a couple of things. And in the event that something really good comes to you later on, if you go looking for trades today, you're going to find plenty of them. And those might be the sharks. Yes, Mike, we call them Danels here. Yep, in honor of our good friend Dan Hodgman. He's been a busy guy lately, but he does send his love. All right. Let's take our deep breath. Stay humble, grateful, and creative in your trading today. I am still working on getting rid of this cold. I just can't believe how this thing is holding on. But I will be with you throughout the day and into the recap today. And I'm looking forward to seeing everybody and hopefully you have a good trading day. All right. So get out there and profit. I'll see you in the proverbial trading pit in just a few minutes. And trade well.